Well,
Okay.
hell, you could
So
teach them
you
this
got
shit.
this high right here and this low right here. And I could confirm that with this. See how I got a quick little indicator. I don't need the indicator. You see how I said this before I turned the indicator on? I don't need the indicator. You want to be the same way to where you're not depending on the indicator, you're using it as a confirmation. I just double check it. I see where my highs and lows are, and then I just confirmed it. Extreme high, extreme low. And it's kind of, I can possibly use this one, but this one is the lane, the range that I'm working with right here. So this is a 4-hour range. And it's going into current price action. This is all-time highs right here. So when you look at this range, you see it came off the all-time highs. It came down to the 50%, came back. These is bigger candles. These are 4-hour candles. So when you see price on a 4-hour or a higher time frame, you're not looking for it to come right back immediately. You're looking for it to play out through a higher time frame. So it came below the 50%, came back. What was in between the 50% and the 61.8? A fair value gap. By it taking these highs, it created a demand zone, supply zone. Sorry about that, which is an order block. It came down all the way to what level? The level that I'm showing you guys. Oh my goodness, the 27. This would, this level and this level, you would have had this. This would not have happened yet. All of this price action would not have happened yet. So you could have took this from the all-time high. This low would have been there, and you was waiting for it to create a high. So it created the high at these all times. So sorry about that. So now you just was waiting for structure to tell you what it wanted to do. So after it came from this optimum trade entry, this golden pocket, it came down to this level right here. It pulled back to a gap. Yeah, I love the gaps. Chris just told y'all, identify the gaps. This is a bearish fair value gap. Even though the candle not there, it gap down, it's a bearish. Whatever direction the gap is going, that's the type of fair value gap it is. This is a bearish fair value gap. So it came back, took these levels, made another supply zone, and it flushed down. Where did it get hung up at again? That same 27 level. Then it continued. It didn't even come back to really retest it, but these levels are zones, not necessarily aligned. These are zones. So it didn't really come back to test it, but it got close enough. Came back, got hung up on the negative OTE. It came right back, used it as resistance, and then it continued to flush. With this fib, if it doesn't close back above zero, it's a high probability that it's going to go below the negative 61.8. And I can show you off a back test at the back test from different range. If it doesn't close back inside here or start coming back in between your range between 0 and 100, it's a high probability that it's going to keep going lower. And if a bullish setup, if it, with the opposite side, if it doesn't close back in between 100 and 0 your range, it's a high probability that it's going to keep going higher. And it's the same thing. And you can take your levels to see how it reacted over here. It literally came back to OTE, which is the golden pocket. This is current price action from the same range from over here. This range started July to the all-time highs, from July 2nd to July 16th. That range is still valid right now, and it's playing out right now. This is a 4-hour range. So for the person that asked me about the higher time frame, yes, I'm always aware of what's happening on the higher time frame, and I would do this on my own chart. I actually got ranges like that up here. It's just a different fib. I can apply that same fib to this right here. It's essentially the same thing. You see it say July 15th. It's just NQ and not SPY. So it told me what price wanted to do just based off this levels right here. And it came back into the golden pocket. And on the higher time frame, I'm sure it's a bearish point of interest in here. Maybe on the daily. Exactly, it is. It's a bearish fair value gap in here. You see how them wicks of the candle is in this fair value gap, and what it do? Play around and drop. But it's gonna come with time and experience. The more you experience, and experience is the number one teacher. We can't, no matter how much things we teach you and all this, until you build up your own experience, get your own confidence with these patterns, and get your own confidence with this price action. It's just things that we can't teach people, or that people got to experience on their own. So I can understand what's happening just by looking at this without no indicators, without drawing no things, like Sebastian said, with his eyes and just being comfortable with it. But this stuff has helped give you confirmation. Not every day we're going to be 100% or at our best, but this is the things that give us the confidence and the confluence that we need to when we're not performing at our best. And then another thing I wanted to say, when you got these key levels where you're high and you're low, right? It's always something at these key levels. Like this floor, it's a fair value gap. So it's a reason for it to bounce back up. It's a bullish fair value gap. If this is a floor, you're expecting to bounce up. Same thing with here. These levels, they got bullish points of interest.